Hello and welcome back to another Pro News, where it's been quite a wild ride in the markets lately. For the past 12 weeks, the dollar's been on quite the winning streak, racking up an impressive 7.9% gain from its low to its peak. Now, this might not be the most dramatic rally we've seen, but it's definitely the longest consistent surge in the US currency's history. That being said, the dollar's starting to show a bit of tiredness. We kicked off the week strong, with the dollar index even hitting that 107 mark, but then things shifted into a bit of a sell-off mode. Why? Well, traders were likely eyeing the monthly unemployment claims and speculating about Friday's NFP. Speaking of NFP, the US economy created 336,000 new jobs in September. This is the highest jump in 8 months and twice as much as expected. But that's not all, as revisions to the previous 2 months have added another 119,000 to the last 2 months' figures. In other words, job growth is accelerating from an already high level. As a result, markets are pricing in even higher rates for longer. Everyone's buzzing about what these numbers might mean for the Fed's next moves, and that's been steering the market's direction. Let's watch and see how it plays out. Alright, let's chat about gold. In just 2 weeks, we saw its price plummet by a whopping 5.5%, dropping every single day. By the end of the week, we were looking at prices nearing $1,815. Now, some of you might remember that gold made a comeback from these levels back in March. But does that mean we're in for a repeat performance? Maybe, maybe not. Some traders are speculating that after such a steep dive, there might be a shortage of sellers. On the technical side of things, a jump back to $1,850 wouldn't be too shocking, but be wary. It could be a classic bull trap, and if that's the case, the bears might just be gearing up for a feast. Definitely something to keep an eye on. The Nasdaq 100 dipped beneath 14,500, but managed a quick recovery thanks to eager buyers. However, the spotlight is now on the S&P 500, which is approaching the crucial 4,200 mark, a key pivot point over the past 20 months. The bulls have consistently kept the market afloat, ensuring it stays above the 200-day moving average. But if we see it settle below this point, things might spiral fast, heating up the markets. Currently, the bullish sentiment hinges on the idea that the bears are running out of steam. With stocks seeming undervalued since late September, many believe it's prime time for a market bounce back. Oil sure has a way of keeping us on our toes. While we anticipated a shift around the $94 per barrel for WTI, the rapid drop caught us off guard. From its peak at the end of September, it nosedived over 12% to $81.60, erasing half of the gains from the past 3 months in just 1 week. This steep descent signals more than just a brief correction and hints at potential further drops. Unexpected reports of dwindling fuel demand from China and the US triggered this fall, while the demand slump in Europe was somewhat expected. We won't be shocked if prices hover around $75 come October. Yet, the tussle to maintain $70 by year-end promises to be intense. On the bright side, lower oil prices can be a blessing for other markets, granting central banks the leeway to adopt less aggressive strategies without the looming shadow of inflation. Cryptos are making waves, rallying even amidst the stock market jitters and gold's downturn. This surge paints a hopeful picture for crypto's future. Diving deeper, it's clear to spot Bitcoin's upward trajectory in the recent lows. However, it struggles to remain above the 28,000 mark, showcasing strong resistance from sellers. Meanwhile, Ethereum's been on a selling spree since early October, which resonates more with the typical crypto reactions considering stock market trends and the dollar's stance. But the question lingers: what's fueling Bitcoin's demand? Do the whales know something we don't yet? Alright, let's unpack what's coming up for the markets. After processing Friday's job numbers, the spotlight will shift back to inflation. The big reveal? Inflation stats dropping this Wednesday before the US market bell, with price growth racing ahead in recent months, hitting 3.7% year over year. The Fed's 2% target seems a distant dream. So, here's the burning question. Is the Fed prepping for another rate hike, or will they play the waiting game? For some insight, mark your calendars for Wednesday evening, when we get a peek at the Federal Open Market Committee's recent meeting minutes. We'll be diving deep into their September decision's rationale, trying to gauge if it was a brief pause or a full stop. The direction of the dollar, US indexes, and by extension, global markets hinges on this. Another thing to keep in mind is that earnings season kicks off again this week, starting as usual with big banks such as JP Morgan, Citigroup, and Wells Fargo. But there's more. Keep an eye on China's inflation figures out Friday and the UK's data drop on Thursday, featuring monthly GDP and industrial projections. Stay tuned. It's gearing up to be a news-packed week.